Bitcoin has seen an unsustained short-term breakout of the weekly downtrend. Now sitting in the horizontal consolidation of more than 3 months, will Bitcoin see a continuation into the 70k region, or are the bears slowly taking back control? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the short-term price action for Bitcoin, the total cryptocurrency market cap, the weekly charts, and briefly diving into Bitcoin dominance and the altcoin season. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. No hype in there, no BS in there, pure raw TA, of course, just how we like to do it. You'll also get access to our general chat, our trading chart and education chat, our news, our help, our daily video, and everything else we have to offer. If you are interested in joining now with over 700 members, contact me in the pinned comment. You can click my name to get access to the information, or you can click these links to find out more. Go ahead and check it out. It'll be great to see you in there. Let's dive into today's video. As we're going to see in the last 24 hours, Bitcoin has seen a little bit of chop. We have broken out of that weekly downtrending diagonal resistance as a consequence of that monthly uptrend sustaining, which is fantastic to see. However, that weekly breakout was short-lived as we were unable to sustain above that level, resulting in a short-term correction. In today's video, we're going to be discussing briefly what is happening here, where is Bitcoin likely to go, and what are the trigger points for directional continuations upward to that range high, or potentially toward the lower side. We're going to be talking about the bullish and the bearish scenario in explicit detail. Before we do get into it, let's go over to the market data. So 24-hour volume is up 30%, sitting at a total of 130 billion. 24-hour liquidations down 6.75%, sitting at 128 million. Of the 128 million in liquidations, 78 million have come from longs and 50 million have come from short positions. Moving over to the broader markets, the DXY is looking bearish. It has broken down from that yearly uptrend we have been talking about over the past couple months, establishing not only a new downtrending diagonal resistance, but of course indicating to us that the DXY is very much now in an overall downtrend, which is fantastic for the risk asset market. And for our traditional assets, we are expecting continuations upwards on the macro for these markets, provided the DXY continues toward the downside. Now, this is probably a consequence as the developing news that a lot of central banks around the globe are looking to start to pivot. They're looking to start to cut their interest rates. So we are seeing some movement toward the downside here with DXY. We do have some major economic news coming up, particularly on the 7th. We have got NFP and unemployment rate data. On the 12th, we have got inflation data. And on the 13th, we have got our interest rate data. All of these events are going to play a massive role in determining where the DXY is likely to move to, and thus the overall perceived systematic risk in the market, and thus the next 4 or 5 weeks of asset price direction. Pay a very, very close eye to specifically that Federal Reserve meeting about 30 minutes after the interest rate data comes out, as that is going to shine some very significant light on the intentions and the narratives that are developing and surrounding the interest rate decisions in future dates. Moving over to the broader markets, the S&P 500 is actually looking pretty decent here. Again, we had a bit of a terrible weekly candle, that prior candle. This candle is looking pretty awful over here. We were able to sustain above the opening price of our week candle of the 13th of May, indicating we still do have that buying strength coming into the market. Overall, we are expecting these macro continuations upward, provided we can break above that prior high point. Again, we need to close a weekly candle above that high to see those macro continuations upwards. And for us to remain in a macro uptrend, we need to remain above our low at 5,000. Only a breakdown on the weekly chart of the 5,000 low would put us into a high time frame downtrend. Until then, macro expectations are still still toward the upside. Moving over to the Dow Jones, exactly the same thing. The market is looking a little lagging, a little weaker compared to the S&P 500, but the premise is the same. We're looking for a weekly candle close above that prior high, which should send the Dow Jones into a monthly continuation, or there's a macro continuation upwards. And for us to remain macro bullish, we need to remain above 37,700. Only a breakdown of that level will send us into a high time frame downtrend. So until then, we are very much macro bullish. Do not get shaken out on these corrections. These corrections appear to be high time frame consolidation and are perfectly healthy. As long as these pullbacks do not break below key structural levels of significance, specifically trigger points or these prior low points, we are still going to be healthy in a high time frame. Remember, downtrends are formed at specific points. Just because we see the price action going down doesn't necessarily mean we are entering a high time frame downtrend. Let's go ahead and jump over to Bitcoin. In today's video, we're going to be discussing the short-term price action. We're going to be going over Bitcoin dominance. We're going over the altcoin season. We're taking a look at the total cryptocurrency market cap and that weekly chart. A quick word from today's video sponsor before we jump into that. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump in, and today's video is going to be a bit of a shorter one because number one, I don't have a lot of time, and number two, there really isn't too much to talk about on the short term, but we're going to jump in and give you the most comprehensive short-term update we can to make sure you not only know what to expect, but you're in the loop of what is happening. So as we can see, there's a lot going on, and at the same time, there really isn't much going on, right? We have a bit of both on the spectrum. We have a lot going on in the higher time frame, but in the short term, we are starting to come close to this apexing point between that monthly uptrend and that weekly downtrend. As we approach this apex point, the probability for these directional moves start to significantly increase. So we need to break it down level by level over here. Let's start on our horizontal levels and zoom out a little bit over here. If we zoom out, this is going to be the high time frame range Bitcoin has been traveling in ever since the start of March. We're looking at March, we're looking at April, looking at May, now we're in June. This is like a 3 and a bit month long horizontal consolidation. Massive consolidation, not only in length, but we're talking about depth. You know, this is like a 20 or so % horizontal consolidation here, which is massive. A huge consolidation we have seen for Bitcoin, and a lot of people in the market are getting very tired of this, very bored of this, but at the end of the day, this is probably one of the best things that could have happened for Bitcoin in terms of the macro cycle, as Bitcoin moved up ridiculously quickly and much faster than historically, what we have seen historically in prior cycles. So to see these long drawn out corrections, yeah, it's been boring, but it is probably one of the better things we have seen for Bitcoin in this cycle so far. So let's talk about what is happening. Again, the range high is going to be that key trigger point for these directional continuations upwards. Above the range high, specifically going to be the trigger point above this red line, which is going to be our buy side liquidity. Okay, if we draw our diagonal trend line in, we can see this diagonal trend line. If we break above this diagonal, we break above our buy side liquidity, we are entering price discovery, and as a consequence of that, we'll be breaking above the range high consolidation. If we take a measured move from our range low to our range high and apply that to the breakout point, we can see the measured move is targeting a price of 85,000. So we enter price discovery, a new all-time high, if we are able to break above this range high. We're on the flip side, if we break below the range low, we are very likely to come back down to retest this macro uptrend. This macro uptrend is actually a representation of the bull market, right? The bull market originated on the breakout on the 23rd of October, okay, 2023, a break of 32,000 that sent us into an official bull market. We have been establishing this uptrend prior to a breakout and after that breakout, and we can see we've had 2 points of retest. This is going to be the bull market uptrend. So worst case scenario, we'll see a breakdown of the range low. We could see a correction towards that 55K region, but even if we see that, it's very important to understand that we would still be macro bullish. It is only if this level is lost, and we'll talk about from a technical perspective another level important in a moment, that we will see the macro uptrend end. Okay, so it is important to sometimes to zoom out and really contextualize what you were looking at rather than getting really stuck into the short term, and worrying about these little tiny moves sometimes and panicking over the high time frame direction. The reality is these little moves have very little impact on the high time frame direction, as these movements are only impacting short term liquidity levels. It is only when these high time frame levels of liquidity end up breaking. We're looking at, the $67,000 region, the range high and low. Would we actually see any impact on the directional moves on the macro? So the macro direction of the asset is not really impacted by these short-term movements, more so impacted by the directional movements out of these high time frame areas of liquidity. So let's now zoom in a little bit. If we look at the channel for what it is, again, it is broken up into two parts. The middle trend line, or the dotted trend line, represents the deviation of a discrepancy between the bullish zone or the bearish zone. And simply, the bullish zone doesn't necessarily mean while the price action is in the bullish zone, we are permanently bullish. We can see these short-term pullbacks, right? It means, however, that while we break above 67,000, we are more likely to see a continuation into the range high, then into the range low, as we saw. We already saw that. Just as if we break under 67,000, like over here, we are more likely to see a directional continuation into the range low as opposed to the range high, which we saw that. So the $67,000 region acts as a trigger point for a directional continuation toward the upper part or the lower part of the high time frame consolidation range. So in other words, a breakdown of 67,000 is going to be the key trigger point for a directional continuation downwards or even potentially back to 60,000. So let's talk about that. While we remain above 67,000, we are technically bullish for continuations into the range high. This just simply means the probability of a retest of the range high is greater than the probability of a retest of the range low. Simple stuff, right? We have to keep it nice and simple. If we were to break below 67,000, where would we expect the price action to correct to first? This is going to be our high. This is going to be our lower high, lower high, lower high. We can draw a horizontal. We break out from this level. This is when that 4-week long downtrend ended. We can extend that point as support, and this would be the potential retest point. The 64.5K region would be a perfect point for Bitcoin to retest if 67,000 is lost. But we don't just have the 67,000 support. We have got our diagonal support as well. So we zoom out and bring that diagonal support back really quickly. We have got that monthly uptrend we were just discussing. This monthly uptrend provides not only support, but is an indication of the trajectory of price action over a period of time, and thus the expected continued trajectory of that price action while that trend line is able to sustain. So to put it in layman's terms, while we remain above this uptrend, the price is expected to continue along and above the uptrend until the uptrend is broken. And if we drag this uptrend across, we can see eventually the uptrend breaches that range high, and therefore we can say while the trend of the monthly chart remains intact, we would expect to eventually see a break or at least a retest of the range high. So a very important diagonal trend line. Again, for us to invalidate this trend line, we want to see a 4-hour, okay? A 4-hour close under the trend line would tell us we have lost the trend line, and we are likely to see a correction towards 67,000 support, and that is when that horizontal level becomes significant again, okay? Let's jump into the short-term bullish case scenario. So if we go down to the short-term charts, we can see Obviously, Bitcoin has seen a little bit of turbulence and we have rejected from that weekly downtrend, but we're not too concerned about that weekly downtrend now. What we are watching is the short-term price action. The short-term price action is showing us Bitcoin has broken back down into, again, that weekly downtrend, but we have found an area of support right over here at 68.8 to 68.5. What we really want to see here for Bitcoin to tell us that we are going to break back above that weekly downtrend and start to show some more strength and a potential push into the 70K region is we really want to see these prior lows, or should I say these prior lower high levels, okay, this red level over here, I'll just draw them out, this red resistance level and this prior high, we want to see these levels break, okay? If we are able to push through this level, this is going to be a great indication we're going to see a continuation upwards. While we remain underneath that local high, there is a possibility we see a correction towards that monthly uptrend yet again. Okay, so I'll say it again. While we remain below this lower high, there's a possibility we could see a correction to retest that monthly uptrend. For us to be confident we are going to see this short-term deviation and downtrend end, we would really like to see that prior local high in the short term eradicate itself and the price breach through that level to send the price much higher into this higher range of resistance, okay? Worst case scenario for Bitcoin, let's draw it out. Worst case scenario is a correction to 67 and then a continuation upwards. If we break below 67, we are officially short-term bearish, expect a continuation to 64. And best case scenario is we just push upwards from here into that range high, okay? We've talked about the trigger points, we've talked about the key levels you're paying attention to. It is very, very hard to sit here and say, well, we are definitely going to see this move. We do have some major economic data coming out, which could massively influence the short term. The price action is now approaching the apex point between that weekly downtrend, okay, and that monthly uptrend. As we approach this apex point, the volatility will generally start to pick up as we breach these levels. So we could potentially see some more liquidity grabs and some more volatile wicks as we approach this apex point. So pay attention, remain cautious, and in these particular points, it is very important to contextualize the charts on a higher time frame and not just zoom into like a 5-minute chart and panic every single time Bitcoin drops a little bit and pumps a little bit. But like we said, guys, these short-term movements have little to no impact on the high time frame direction. So if you are a high time frame investor and you care about, well, what Bitcoin is going to be like in 3 months from now, how is the cryptocurrency market going to be in 6 months from now, focusing on these little movements serves you no good besides to emotionally stress you out if you are not a confident trader. If you are day trading and you are a scalp trader or even a swing trader, focus on this. But if you care about the macro outlook for Bitcoin, you focusing on these short-term movements will do absolutely nothing for you, okay? Be aware of the trigger points. Be aware of what they mean. But don't sit here and stress out and panic every time Bitcoin corrects towards support or rallies towards resistance. It's irrelevant. It means nothing. Like we said already, only the breaches of high time frame levels of support and resistance can impact the direction of the high time frame trend. Everything between this level is simply consolidation and should be taken at face value as consolidation. Do not try to extract meaning from something that has no other meaning other than what it's supposed to mean. Let's move over to macro charts. Bitcoin dominance, guys, total cryptocurrency market cap, total altcoin market cap, and weekly. Let's start on the weekly. Weekly chart is looking good. Like we said, weekly chart looks fantastic, provided two things. Number one, we remain above 60,000. This is the pi cycle high, 60,000. Provided we remain above 60,000, we are good. If we drop below 60,000, this is our low. Okay, we have, look at this, all right? We're going to show you. We're going to show you simply. These are our lows, okay? Bull market low, bull market initiation, higher low this region, okay? If we break below 60,000, that will be the first sign of structural weakness in the trend that we've had since the start of the bull run. That would be very, very, very bad. So provided 60,000 is able to sustain as support, the overall direction is into price discovery and up. That is literally all you need to know about this chart. We're trying to keep it very simple. There's no need to overcomplicate it. The macro direction is up. For us to see that macro continuation, we need to break above that trigger point, but for us to get that and for us to remain macro bullish, all we need to do is remain above 60 on the weekly. And if we do that, we will remain macro bullish. Moving over to the total market cap, exactly the same premise. Provided that total market cap value of 2.2 to 2.13 trillion is able to sustain, we are expecting macro continuations upwards. It is only if this level is broken do we actually see the first indication of high time frame weakness from a structural perspective, which could result in a high time frame downtrend. Remember to contextualize the high time frame charts. Do not get caught up too much in the short term of the daily movements when you're focusing on the bigger picture. Moving on to Bitcoin dominance. Bitcoin dominance has seen a bit of a green day actually. Altcoins suffering a little bit over the last 24 hours. Not fantastic to see. Altcoins really don't have a lot of movement room left before we break key structural levels. We'll talk about it in a second. The Bitcoin dominance chart is retesting that yearly uptrend. Again, while we remain underneath here, we are initiating a downtrend. We are starting the basis of the downtrend. We're not in the downtrend yet. We are starting a downtrend. So historically, we have seen Bitcoin dominance drop to around 38 to 40%. This has generally marked the Bitcoin top. And during that correction, we see altcoins go parabolic, okay? The parabolic phase builds up. We don't just turn on parabolic phase. It slowly builds up into it over time. And generally, for us to see an altcoin season, we need to see that total market cap increase with Bitcoin dominance falling. So we're going to likely see that. There is one threat on the charts. There is one thing I am deeply concerned about. And to show you this, I want to go ahead and chuck it on black and white to make it a little bit more visible. If we take a look at the pi cycle indicator and just get rid of all these trend lines, what we saw historically, okay, is from that halving date. Well, not even from the halving date, from the bull market origination, which was going to the breakout of that 0.2, okay, the 0.2 level, which is over here. From that point onwards, we remained above the midline levels of the pi cycle indicator the entire way until we created a pi cycle high, okay, and then we broke down from that level. If we look at the current price action, the current weekly chart is retesting, okay? It is currently retesting the high short moving average of the pi cycle indicator on the weekly. If we look at the historical price action, we never closed a weekly candle below that level, not once. In that entire parabolic run, in the entire bull market, we did not close a weekly candle below it. So we are seeing a retest here. We've seen 1, 2, 3, 4 retests of this level on the weekly. It tells us that the altcoin market does not have a lot of downward possibility this week, which will indicate either we're going to see altcoins remain neutral or increase in value. We're not really going to see much corrections. And again, if we do see some corrections on altcoin market, it is paramount that this level is able to sustain as support, because if it doesn't sustain as support, it is indicating that we are seeing deviation from the prior altcoin pattern, the prior altcoin cycle pattern, which could tell us, well, number one, we are losing a significant data point, which we have used historically to project the altcoin parabolic phases. And number two, we could be entering a downtrend for altcoins. There's a lot of opportunities, a lot of options that arises from that. Again, phase number 4, that is the phase we are currently in. This pattern, the 1, 2, 3, 4, 5, 6 phase pattern, okay? Again, dead gap bounce high, bear market resistance, bear market consolidation, bull market initiation, and parabolic phase into all-time high. That pattern we have seen play out perfectly thus far is at risk of ending if we close a weekly candle under that level. So pay attention, guys. Thanks for watching. Catch you guys in the next video. Cheers.